All right, let's get the latest on how bond markets have traded overnight. James Shillington joining us from FIIG Securities. Now, James, good to see you there. Yeah, another lot of supply coming into the US Treasuries market. How have those markets been trading?
Yeah, good morning, Bridie. Well, as you mentioned earlier, it's a bit of a volatile market overnight. We did see a risk-on sentiment prevail in Europe before that weaker session in the US that we're seeing now. A short time ago, I saw the US 10-year yield down about 3 basis points to 2.7%, so just a small rally in bonds overnight.
All right, so just in terms of sentiment at the moment, I mean, is it all still being driven by a kind of recalibration, if you like, following those comments from Janet Yellen last week?
Yeah, well, sentiment in fixed income markets right now is fantastic. I think this was validated last week when the largest Greek bank by assets raised debt capital funding on the global market for the first time in 5 years. I think that has been helped along by some of the rhetoric out of the US, but I think it also highlights the willingness for investors to add risk in this environment and really reach for yield given the global low rate environment we're operating in.
All right, just finally, what are you focusing on today?
Yeah, well, there's not a great deal of news flow expected locally. We're going to continue to position our clients around some of this new issuance flow. However, over the last 2 weeks, we've really been focusing again on Qantas. Now, we've seen a really sharp correction in their bond pricing. Markets are just reassessing the prospect of no debt guarantee that's going to be forthcoming in the near future, and no amendment to the Qantas Sale Act anytime soon. So over the past 2 weeks, we've seen Qantas bonds move about 150 basis points wider in credit margin. So quite a sharp correction.
Absolutely. Look, James, thank you so much for that. James Shillington there from